is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of The Trader's Edge. Thanks so much for joining me. I absolutely love being here with you. It is marvelous Monday. Hope you had a fantastic weekend out there. I know I did. Got to spend some time up in Boston, walking the streets with Tom on Friday night, going to some of his favorite hangouts, if you will, as from childhood, if you will. You talk about anchors, positive anchors in life, and the stories, and just an absolute blast meeting all the folks up in Boston. The Go Long America tour that Tom and I have been on has been it's been outstanding. I mean, extraordinary. Just simply having the opportunity to shake hands, a few hugs here and there, just see all of the different folks on the other end of this camera, which is so cool because, we spend time here. We're talking on the radio, or obviously you can watch us on TigerTV, but we don't see you. You get an opportunity to see us, and it's always so great. It's kind of like, I don't have an MBA. What I have is an MBWA, which was, and I learned this so long ago, management by walking around. There is nothing better than getting off your duff and going out and meeting, in our case here, meeting the clients that are listening to us, or our clients are subscribers, whatever it is. It's always so great to get out there and just be out there. It didn't matter. In fact, it was beautiful, folks, because, what's so cool, we live down here in Florida, and folks think we only have one season. We really have 4 seasons. They're just a little bit tempered, if you will. But it was so great to wake up Saturday morning early and look outside and all kinds of snow. It was a little bit, the skies were gray. They kind of cleared away. All the skies became blue. Tom and I, we tugged them along with us on the way up there on Friday, and they finally arrived Saturday afternoon, probably about 6 o'clock at night. Saw those great blue skies, and just simply great to be up in Boston. So thank you to everybody for the hospitality up there. We have one more show. That is tomorrow night here in Tampa. We're doing that from 6:30 to 9. 6:30 to 9:30, and that's going to be at the Hyatt, which is right across from the airport, in essence, off of 60. I think it's called the Grand Hyatt. So you still can sign up for that. Just go over to the homepage at tfnn.com, and what we'd love to be able to do is see you there as well. So please go to the homepage, tfnn.com, sign up for that. I know that there is seating available for that, and absolutely it was a great time. And, we all learned. We all learned in Boston, Spokane, Denver, San Francisco, and so we want to be able to help teach you. We want to be able to learn from you. And, there are a lot of different great questions, messages, if you will. And even on Saturday, I think we had we could have gone on with the Q&A period. Didn't seem like anybody really wanted to leave, but and so much knowledge, if you will, that's shared there on both sides. And one thing that I do know, folks, and that's in order to take your lives to the next level. And this is so cool about when we talk about pattern, recognition. We're going to take a look at patterns on our charts here. But in order to take your life to the next level, folks, what we've got to realize is the same pattern of thinking that has gotten us to where we're at today is not the pattern of thinking that's going to get us to where we want to go tomorrow. Just a little subtlety there. So just think about that. The same pattern that's gotten us to where we are today is not going to be the pattern that's going to get you to where it is you want to go tomorrow. You need to break outside of that pattern. You need to expand your boundaries, maybe expand your thinking. You're in the right place to do that. And if you just take a quick look around the markets here, the world, you've got the Dow futures off about 20. You've got the ES mini down about 2.5, 3 points off of their lows early morning, maybe about 4 o'clock or so. They were down about 7 points. You got the NASDAQ off 4. Small caps just off slightly. King dollar down 12 ticks. Gold trading out at 17.08. That's down $1.20. You've got silver up 17 cents right now. Light sweet crude trading out at 107.31. That's up 61 cents. You've got DAX. The DAX is down 30 points. It was down quite a bit this morning. The DAX did gap down. We'll take a look at that. The FTSE's down 11. In Asia, you had the Nikkei down 78. The Hang Seng, always love this number, Hang Seng down 296 points. The Shanghai off 15. So around the world, you've got a negative market, if you will. So today's role of the U.S., is this going to be go long America, or is this going to be continued on a nice retracement? Because that's really what the market needs. It doesn't have the volume up here at the highs to take out the highs. And what you want to be able to see is you'd love to see, just like running a race, and it's been running a race really since November 25th, if you will. Some folks might take a look at it as around the December 19th area, but really since November 25th, you've had the markets up on a tear. Hasn't been necessarily a lot of volume, if you will. You've seen some follow through days, but if you just take a look at the overall volume in general. It hasn't been there. And so if you're a bull, you want to see a pullback here, even though it might cut in your profit. Just keep your stops tight, if you will. And if we take a look what I've got up on my screen, you know, folks, you can watch us on Tiger TV. We want you to do that. We appreciate everybody listening to us on the radio. And, you know, one of the questions that Tom asks each time when he starts the seminar series, if you will, is how many folks, or sometime during it, how many folks are actually listening on Tiger TV. And so we know that's working because so many hands, the majority of the hands go up. And what's so great about that is you're able to watch us, watch the charts, if you will. And you can always catch the archive of this show. I believe it is now on Channel 9, lucky number 9, if you will. And if we do take a look at the ES Mini, that's what I've got up on my screen here right now. What you're going to see is a couple of different patterns out here. One of the patterns is going to be a retracement pattern. In that case, what you would do is you'd go down to the low that was put in on the ES Mini. That's on February 29th, the low down there being at the 1356.75 level, all the way up to the high that was put in here on the ES Mini. Looks like that was at 5 o'clock on March the 1st, up at 1375. No, I think there was a little bit higher. Let's see, 1377 at 7:30 at night on March the 1st. Looks like that was the high out there, 1377. Yep, 1377. So what you'll see is the 0.786 retracement here. That's this red line right here at the bottom. You can see the extension, if you will, going across my cursor. And where is it that the ES Mini moved down to? Right down into that area. 1361.08 is really the number that shows up. If you were going to be exact, we know we're not going to be exact. We're just looking for a good general range. Where did the ES Mini get down to? Well, at 4:30 this morning, the ES Mini got down to 1360.50. 1360.50 versus 1361.08. Are you kidding me? That's a beautiful thing. That's why you want to understand these 0.618, 0.786, 0.382 retracement areas just as well as you want to be able to understand the expansion. What happens when you're down going up an elevator, if you will, and you get to the floor? Some folks get off. In this case here, if you were short, you had folks that were getting off at that 0.786 floor, and now all that is going on is normal retracement, a normal bounce off of that area. We'll take a look at that. There are also ABC patterns. That's why you want to show up tonight, because I know Tom will talk about quality volume. If you take a look at the first A to B equals CD pattern, what I would do is I'd start up at that high we talked at 1377. My B point would be right down here at 8 in the morning on March the 2nd. My C point would be a retracement right up here to the 1030 time frame on March the 2nd. And what you'll see is a 1 to, let me just make sure we've got this here. A 1 to 1 would have completed right here. At the, it's kind of about 1364 level. But here's what I want to do. Let's just come back here. And, you know, for folks, I'm just looking at this screen fresh, if you will. We've been traveling and working and preparing for the Go Along America tour. I customized it just a bit, if you will, just for Boston, the first couple of slides, and probably will do the same here for Tampa, if you will. Now, you can see on the retracement from this leg down from the 1377, that's going, again, from the March 1st area down to the low that was put in here on the leg. When I say low, just simply the leg coming in at 8 o'clock in the morning. What you'll see is it was a 0.618 retracement, so that was just normal. You'd expect to do a 1-to-1. If you take a look at, though, coming off of that the C point. This was B to C, but coming off of that C point, you can see how the ES Mini, how as it came down with a little bit of conviction, meaning it was coming down on a stronger angle than that A to B leg. When you come down on a stronger angle, folks, what it tells you is be careful. You're likely going to do more than the 1-to-1, A to B equals C to D. And what happened is it did just that. It did about a 1 to 1.272, just a little bit beyond that. That's the first ABC that you could take a look at that shows up out there. You could also take a look at this ABC within that ABC. That one here, you'd start off at the high at 1030 on March the 2nd, move down to the low that was put in on March the 2nd as well, but that was at 1:30 in the afternoon, and then come all the way back up to the high at 4 o'clock on March 2nd. A 1-to-1 ABC would complete here at the 1362. What does it do? It does a 1 to 1.272. That says 1360.54. And what was that low that was put in this morning at 4:30? And I know it was put in because I was up, and it was at 1360.50 versus 1360.54. You want to learn your ABCs, folks? They are great, and you can join us tomorrow at 6:30 to 9:30 at the Hyatt in Grand Hyatt in Tampa. I'll get it out. I'll absolutely get it out. And let's go to our first caller. Let's go to Nick in Titusville. Nick, thanks for calling. Thanks for holding.
It's nice to hear your voice again.
Well, thank you. How was your weekend?
Oh, terrific.
Yeah, how'd you like that cold front that came through here?
Well, it's only a temporary. It's nice 1-2 days just to keep the bugs down.
Yeah, I tell you, boy, it was 70 degrees, and then that cold front came through, and we lost 20 degrees right away.
Oh, yeah, but today we'll gain it back.
I love it. I love it. Absolutely. What did you want to look at today, Nick?
Over the weekend, I was looking at CBI.
Okay.
And what impressed me was from the October low.
Yes.
Every time it went up and came back down, the next went up again, it went up again, down, and then back up again.
All right. Do me a favor, Nick. Hang on the line. We're going to our first break, 877-927-6648. Get in line with Nick, as you will. We'll get back. We'll go take a look at CBI. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be at the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Dow futures off about 24 right now. ES Mini down 3. NASDAQ futures off about 4. And we're going back to Titusville to our man Nick. We're taking a look at Chicago Bridge and Iron. Ticker symbol on that is CBI. Closed out at 45.87, and this thing has been on a little tear, if you will. So are you in it? Are you looking to get in? Tell me how I can help you, Nick.
I'm looking to get in.
You're looking to get in. Okay. So, you know what? When I take a look at this pattern here, folks, and if you're watching us on Tiger TV, it did make a 3 drive to a bottom pattern. In fact, I remember being in. I can't remember if we were long or short this, or might have been both on Chicago Bridge and Iron. I think it was long in the newsletter at one point, and I'd have to go back and really take a look at the archives, see where we're at. Now, what it did do, what's interesting, is coming into that October 4th area, and that's the place where you first started taking a look at, you know, this stock and how it's performed after that October 4th area. And folks, on October 4th, it was trading down at the 23.88. Right now, as I say, on Friday, closed out at 45.87. But as it was going down there, that's why you want to take a look at these patterns. You know, if you just take a look at the pattern expansion between the swing point going back from August 8th. And why is August 8th important? Because August 9th, in essence, is when our markets here made a real significant low. And if you take a look at the August 8th to the October 4th area, you had a 1.272 expansion. You also had this 3 drive to a bottom pattern. So a real nice area for a reward to risk trade here. Now that A to B leg, Nick, went all the way from the lows of 23.88 all the way up to the high that was put in on December 1st. Now when it did that, and it got up to December 1st, only had 1.2 million shares. And as it crossed through that B point, that was our B point, you crossed through that here. Looks like you did that with 1.4 million shares. So you had a confirmation of an A to B equals CD because you came through that B point with more volume. Now, where does that take us to? Well, if you take a look at Chicago Bridge and Iron, again, we're looking at the daily chart. That ABC, folks, would take you to 53.17. You're at 45.87 right now. Now, I don't think that the reward to risk is in this trade at the moment. And what I will do is, if you're trading the daily chart, Nick,
Yes.
one of the best things to then do is go back and take a look at the weekly chart and see what the weekly chart, you know, because what you like to have is maybe some type of synergy, if you will, or understand on the roadmap what's the longer term look like and what is it going against and what's the shorter term. And so when you're looking for if you're looking at a daily chart and you're trading the daily chart, what I then like to do is drop down maybe to a 30-minute just to get some type of confirmation. Maybe it's a candle pattern. Maybe it's a volume test at a swing point. But from an entry standpoint, you drop down to a lower level. And from an overall view standpoint, you know, you come up to the peak, if you will, to look out over the mountain and see what the stock is up against. And in this case here, the reason why it's important to go back is if you take a look at Chicago Bridge and Iron and you go back to its May 2nd swing point, and on May 2nd, you know, all the markets were really up against May 2nd right now, right? You know,
Yep.
Okay? And so if you just simply take a look at May 2nd, the week of May 2nd, this thing had huge volume on the way down. You know, the next time that and when I say huge volume, did 27 million shares that week. And that's what it's into right now. It's into that swing point. And the top of that swing point there is 49.82. I think that A to B equals C to D took it up over that area. But you're looking at 27 million shares versus last week, you know, and last week was big volume in this. Last week it did 15 million shares. So there's not enough energy right now to push this thing over. You're inside this supply line, if you will. And so what you'd want to do is you'd want to wait for a pullback and just simply taking a look at the May 2nd bar that you're into. Does that make sense?
Yes, it does.
Okay, and so then on the weekly chart, what you're then taking a look at is you'd go back and take a look at really the next swing point that's out here to see if it would hold. That swing point is July 22nd, and the high out there, Nick, is 45.12. So you're only, 60 cents away or so, 65 pennies away. And right now, Chicago Bridge and Iron is actually, it's trading out right now at 46.10. So it looks like it's going to open up higher. And let's see here, 46.10 it doesn't gap up, so it's just going to open up higher right now, trading out at 46.10 in the pre-market. If we're taking a look at where could this thing pull back to, I'll just simply come back to the daily chart. You know, you'd like to see it get as close to that B point, that December 5th area, that 41.92 as possible, because then what you could be taking a look at there, Nick, is you'd have to do the reward to risk, and there you're looking at, okay, you know, what's the stop that you'd have to put in when it gets down to that B point, if you will, and you want to see it come back there on lighter volume. So you'd like to see it come back into that area on less than 1.3 million shares. Then you probably have a decent reward to risk trade on CBI. All righty?
Fine.
Okay. Hey, Nick.
Thank you, sir.
You bet. Thanks for calling. Always good to hear your voice. Folks, you bet. Give us a call, 877-927-6648. When we get back, we'll go see how these markets are going to pop or if they're going to drop. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You've got the trading down 24 points right now. S&P's off 3. You've got the composite off 6. Leading the charge on the way down are those small caps. Those small caps are getting a little bit of strength in them. They're down 2.3, a couple of points, if you will, about 0.29. So relatively flat, if you will, out there in the markets. Apple is no small cap, folks. Apple is a big cap, and it's trading up 90 cents or so right now, about 60 to 90 cents, if you will. Trading out at the 545, almost 546 level. Cisco off 14 cents. Google down 52 cents. Intel off a couple of pennies. Microsoft off 15 cents. I saw yesterday in a news report that Bill Gates and Warren Buffett were no longer the richest men in the world. It's the, what's the guy, Slim, I forget his first name, he owns American Mobile or something like that. I believe that's how you pronounce the telephone company. Nothing like having a monopoly, if you will. In the game of Monopoly. You don't talk about the game of Monopoly, or really just the money game. You know, what's so cool about the the live workshop that Tom and I did on Saturday morning in Boston, and it really just resonated. It really resonated there almost more so, I'd say, than any of the other locations that we did. Maybe it was just because it was a Saturday morning, if you will. But you know, I talk about, folks, during the workshop. One of the things that I do is talk about the 5 reasons that folks aren't as wealthy as that they would like to be. Or if you've achieved that level, what is it that's holding you back from being able to attain even higher levels out there? And, you know, and folks, and one of those areas that we talk about is just simply that you don't treat this game like a business. And there's some correlations. I'm not going to do it here live on the radio right now, but please join us. But there are some correlations where I saw the light bulbs just automatically go off. And, you know, we had about 140, 150 people that came to the workshop on Saturday morning. Love to see the same type of attendance here in Tampa. And it was so great just to see those light bulbs go off and make that click. So, you know, I knew that I hit a home run, if you will. And talk about home runs. You just talk about today's lineup. Following this show, you've got Tom and I doing the Money Masters, and Basil Chapman. Basil attended on Saturday. He was there. It was so great to give him a hug, you know, spend a little bit of time with him. Then we've got Larry Pesavento. We'll go out to Tucson, Arizona. Larry from 12 to 1. David White, the warm-up band today for the Tom O'Brien Show. And if you take a look at the markets right now, you've got the Dow off about 37 points right now. Let's go take a look at what is leading on the way up, what's leading on the way down as far as individual stocks. You've got Alta Salon. They're in second place right now. They're up 2%. That is ULTA. Let's go take a look at that. That is in the IBD. ULTA is the ticker symbol on that. Let me see here if they've got any earnings or anything that they came out with. No news, just simply trading up a couple of points up at the 87.09 level. And the 87.09, this stock has had several nice signs of strength in here. The most recent one goes all the way back to September of 2011. You gapped up on 4.6 million shares. You know, Tom teaches you, and it's so important, folks. Tom teaches, you know, about the importance of being able to not buy the breakout, but wait for the breakout to come back. It doesn't always happen. But when it does happen, it really puts the reward to risk on your side, and oftentimes it will happen. And people say, why does that? Why does it all of a sudden break out on volume, and then it'll come back? Well, it's really about understanding the patterns that are out there. You see, when it's breaking out on volume, in this day here specifically, on September 9th, when it broke out on 4.6 million shares, you take a look at the trading session before, it did 626,000. The session before that, 1.2 million. The session before that, 529,000. Yet it breaks out on 4 million shares, if you will. 4.6 million shares. So why? When it's breaking out on 4.6 million shares, that's not enough of you and me and us's, if you will, that are all buying on that same day. Instead, what you've got is institutional money that's coming in there, and those are the signatures, if you will. And they've been accumulating many times along the way. Okay, so they've got the majority of their position in place, and they want to go ahead and complete the rest of that position, if you will. And so then you've got that volume. Well, the institutional guys, once they're done, if you will, and what happens is, you see, when you see those institutions buying, all of a sudden you might want to jump on board. You're afraid that you're going to, that the train's going to leave without you. And sometimes it does. But folks, if you're looking for ways to really make money, you're really looking for ways to make sure that you got the right reward to risk, wait for that train to come back to you. In this case here in the market, that's when the train is coming back to that breakout area. That's exactly what ULTA, Alta Salon, did on October 4th. And that's pretty important to understand, because on October 4th, our markets were making the most significant low here in the last 3 months, if you will, 4 months, 5 months, if you will, October 4th. Now, when it came back, the volume actually on October, let's see here, on October the 4th was 1.4 million shares. So that 1.4 million shares was going into the day where it had broken out on September the 8th. And it was doing that with 1.9 million shares. So you're going into 1.4 versus 1.9, but you're really taking a look at that 4.6. So it's really a beautiful thing there when you take a look at Alta Salon, folks. So, you want to be able to look for those type of breakouts. Where's the last breakout that this had? It wasn't as significant, but it did gap up on January 5th. It did that with 2.2 million shares, trading out right now at 86.70. And everybody at that salon, I don't know if you've been in that store. I went into an Alta Salon several months ago. And, you talk about a selection of shampoos and hair products. I mean, oh my God, I've never seen that. It was like being inside a Walmart of shampoos, if you will. And I don't know how anybody could actually find what it is that they want. Now, which is cool is you can get you walk around there and pop open the cap, if you will, and get the fragrance that smells the best, if you will. Let's go to Tom in Pittsburgh. Tom, thanks for calling. Thanks for holding.
Hey, Steve, how's everything?
Everything is great. How's life with you?
Well, I woke up to about 4 inches of snow.
Oh, no. Oh, that's a good thing. You guys haven't had much snow, have you?
No, actually, we have had a lot of snow, but the good thing is that we always get a warming trend right after it snows.
Okay, all right.
It melts. Like, for example, on Wednesday and Thursday, it's going up to the upper 60s.
No, really?
So it's all going to be melted here in a couple of days.
Does that mean you can polish off your golf clubs and go golfing?
You know what? At the gym the other day, there's, the guys there were talking about going out golfing.
Oh, my goodness. Oh, that's great. Hey, it's great. So, pretty soon spring is in the air. That's what that means.
Yeah, and I can't wait for it.
Now, I tell you, so there was that line of storms, a devastating line of storms last week that was going all the way really from the Gulf, if you will, up into the Midwest. Did that line of storms or wind or anything get anywhere near the Pittsburgh area, or did it stay south of there?
It pretty much stayed away from us. I know it got up in the 60s on Friday.
Yeah.
And then it started turning cooler. I mean, it wasn't Saturday, it was nice, but it was cooler. And then in the afternoon, we started having snow flurries.
Yes.
And it started, building. You lived up in Michigan.
I did, absolutely.
You know that deal.
I do know that deal.
Yeah,
I don't
start building.
Hey, Tom, Tom was kidding me on the air last week about
You're
how cold, about how cold I was when we got to Spokane. Oh, wait till he comes in here. You should have seen him freezing Friday night when we got into Boston. Oh my God, it was cold. No, he didn't have his shorts on.
Oh, okay.
He wanted to borrow my earmuffs.
Oh, did you go to Angelina's?
We went to we went to Regina's. Regina's.
Okay.
We absolutely did, and we had a great time. Oh my God,
okay.
The goop. That's what it's all about. The goop that they have there. We'll talk about that during during the Money Master show. But it was a great time. It was really great to be up there.
All right.
You wanted to look at RIM.
Yeah, I know that Tom's been talking about it, and I see a high volume price point at 17.96. It's coming into a high volume low with less volume. And I want to get your opinion. Is this the time to buy, or wait till it gets? Preferably, I'd like to see it to get to the bottom of that candle.
Yeah, I really think you need to wait on this one, and the reason is that if you go back just simply to 3 trading sessions ago when it gapped down, and and it gapped down. Now this is coming back obviously after a weekend. Why does this say 3 trading? Let me refresh the screen here. Sometimes this. Let me just make sure I've got all the right data up here. Why would it only be 3 trading sessions? That doesn't make sense. 229, 31, 32. Wow, I don't know what's going on with this system here on RIM. Very strange. So it's trading out at 1364, right? Is that what you show? So to make sure.
Yeah, 1365 right now.
Yeah. Okay. So it does have this gap in here from February 29th down to March 1st. No, okay. It's okay. I'm not even coherent with regard to dates. So that was during the week.
Year.
Yeah, exactly. That's right. So it leaps down, if you will, right? Yeah. During the week. So it wasn't even after a weekend was really what I was trying to get at. Sometimes after a weekend you take a look. So just during the week this thing gaps down, if you will. And, where it's headed to really is the gap that was created going back to that December 20th area that you're taking a look at. And that gap is still open. And the high on that gap is 1313, 46 million shares. You're trading into that high volume candle where it gapped up, if you will, which had 75 million shares. But the high of that is 1414. You're trading below that. And it hasn't touched yet the bottom of that little breakout area. Just like we were taking a look at Alta Salon. Just previously, as that was trading up and how that came back to the breakout area. Let's be patient on this one. See if this thing will pull back into the December 20th time frame with that 46 million shares. Ideally, it would get down and touch 1244 and then reject that area, do that on lighter volume. And then what I would do, especially on a stock like this is if you do take the trade, I would risk less than 1% of, if using my trading system, I would risk less than 1% of this. And what I would really be looking for is some kind of sign of strength.
Yeah.
Coming off that bottom. Because the problem, the real problem with RIM is there's not a whole lot of people that are in this stock that are happy campers. Mm-hmm. In fact, let's see here. There's no one. RIM, when it came out, folks, assuming that this was back in May of 2004, the low on it is 1455. You're trading at 1364. That means
everybody's losing.
Yeah, it means nobody's in the money. So, you're dealing with supply lines, if you will, that are so huge. Instead, what I'd rather do, if the market were to, if you're going to play this and you were taking a look at the market also, moving higher, if you will. So let's say you get to a swing point where you see the markets in general have tested an area on lighter volume, and then you're starting to look for stocks that are going to take off or you're going to break out. I'd rather go back to that Alta, where everybody's in the party. You know what I mean? Because there's strength out there. I think because at that stage you don't really have a supply line.
What's that symbol?
ULTA. ULTA. So, you got to take a look at it. The strategies that I love to employ are the ones where, where you're really, the trend is your friend, if you will. And I like to be in stocks. Think about it like this. If everybody is in the money, then, all you're dealing with is just some normal profit taking along the way. If you're if you're trading in the direction of the market. In this case here, you take a look at RIM, absolutely nobody is in the money on this. I mean, other than the guys that bought on December 20th.
Yeah.
So that's just but that's my own personal take on, and that's my own personal trading view, is just trying to take a look at, is look at it that way, from that perspective. It's, RIM's got to start over. And you're talking about a company starting over versus the Apple iPhone versus the Android phone. Oh my God. That was so cool is, I've got an older Apple phone, Tom, and Tom actually has the Android phone. And it's so cool because as we're driving around even Boston, he speaks into the phone, and it just says where it is we want to go, and boom, it takes us there. It tells you turn right here, turn right in 250 feet. The Apple doesn't even do that. So, the RIM BlackBerry, I just think it's a dead horse.
Okay. Do you have time for one more?
Sure.
Sony.
Sony. SNE is the ticker symbol on that, folks. And that is a beautiful-looking chart out there with the yen getting weaker. Sony really took off. I remember a caller calling in a while back when we were in the 17 range, and that was a good spot for entry. And right now you've got Sony trading out at 21.37. And what Sony did here is it got up to its highs from October 28th. In our markets, it's the October 27th area. October 28th on Sony had almost 1.2 million shares. And then what it did was it got up there with 1.5 million shares. Now, what I don't know about Sony is how to actually trade this chart, because so much of it is maybe currency valuation based, if you will, in some of these gaps. If I were just going to look at this chart, for example, right now, and assume that I did not take a look at any currencies, I would tell you stay away from it. The reason I tell you to stay away from it is because of this island candle formation that it created back up here on February 28th. Did you see that on Tiger TV, or maybe your own chart, if you will?
Yeah, I'm looking at it.
And if you take and so the high time that it went back up against the last time that it created that island formation candle. So if this is not, if the gaps in this thing aren't currency related, which I know that they are because we're dealing with Sony, but look at the last time that you went up there, and you had that island candle formation. So I just think you've got to let this thing pull back, quite frankly, to the breakout area of February the 3rd. That's the first place I'd take a look at, right around the 1932 area. All righty?
All right.
Hey, thanks for calling, and enjoy your summer up there. It's going to be coming in on Wednesday for you.
Can't wait.
877-927-6648. Dow's off 34. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. It is Marvelous Monday. You got Basil Chapman from 11 to 12, Larry Pesavento 12 to 1, David White 3 to 4, the Tom O'Brien Show 4 to 6. And, folks, we got a couple different promotions going on around here right now. One that you want to absolutely take advantage of is our Tiger Dollar promotion. That is good, going on through March 11th. That, I believe, is Sunday. And, folks, that's where you can earn 20 to 30% on your money. So, and it's a great program because they're transferable. You can transfer your Tiger dollars to somebody else. You can give a gift, if you will, which is great. You can save 20 to 30% off of the different services that we offer here, the different subscription levels. I am as well coming out into the field. I'll be back in Denver March 23rd and 24th. All these are going to be Friday, Saturday dates, doing Master Trader Series courses. I'll be doing those in Tampa as well on April 13th and 14th, right behind Tax Day. That's a great time, if you will. And on Boston on the 27th and 28th, back up there, and can't wait to get up there. You can go to the homepage of TFNN.com and sign up for those as well. And if you take a look at the markets here, we're looking at the Dow being off about 25 points, S&P's off 4, composite down 6, small caps. Now, we know small caps have been leading us down on this charge here, if you will. Hasn't been much of a charge, has it? But the small caps have been leading us down. And what I do have up on my screen here right now is the NDX 100. This is a chart you want to be able to pay attention to. Why? Because when you start taking a look at the trend, we were talking about, Nick was pointing out a trend when we were taking a look at Chicago Bridge and Iron. If we take a look at the trend line here in the NDX 100, the strongest index by far, just simply coming off of that December 19th area here, folks, you will see that until that area is broken, these markets are not going to move to the downside. It's going to need more than just the small caps. The small caps often will give you a leading signal. It's always really important to watch the small caps. Small caps will either peak maybe a day or two early, or maybe on the downside they will go ahead and they will pull off of the bottom just a day or two early. So always good to watch the small caps, if you will. Then you want to certainly be taking a look at what's going on inside the market from a strength standpoint, because you're going to need more than just one party going on if these markets are going to have a nice, healthy, a very nice, healthy pullback. And right now, that's not in the cards, even with, the markets, even the small caps moving down on Friday with some conviction, with some volume behind it. You still weren't able to get any other participants in the NDX and the S&P in the Dow to really participate. So in this trend line, folks, I'm just simply drawing it from the lows of December 19th. You can draw it on your charts as well. We're not trying to be 100% exact here. The next candle that you can use January 30th if you want the low there at 24.33. That'll give you a good enough idea. You can see right now now that the NDX is trading out at 2638, trading right on that trend line. What you want to do is watch that trend line, folks. See if that gets broken. Do I think it'll get broken? I do. I absolutely do. And why is that? Well, we are seeing a little bit of a breakdown of that ascending wedge area inside the S&P 500. Now, we won't get a confirmation on that until we see the S&P close below May 2nd. The price point on that is 1358.59. You're trading out at 1366.21 right now. But the ascending wedge, I'm looking forward to just evaporating that from my screen here. You can see we are trading below that, if you will, and you won't get a confirmation that the markets are ready to correct. In this case here, where would they correct to? Well, I think they'll pull back first to this this declining tops line that we've got out here in the S&P 500. Probably takes in the 1318 range, 1320 range right now. Thanks so much for joining us, folks. Stay tuned. Tom and I will be up next. Then Basil Chapman, Larry Pesavento, David White, and the Tom O'Brien Show from 4 to 6. Take care. Have a great Monday, folks.